Believe it or not, I actually make more money during a recession than I do when the market's going up. So it's been a few months, right? I've been off for a little bit. I wanted to take a break with my family. And so I've just more recently started posting. But we're in this crisis of Corona, right? Hope everybody's staying safe. I hope you guys are doing whatever it is you guys need to be doing. And I also really hope financially you guys aren't getting affected too much. I think everybody is. But so I wanted to start sharing some financial tips on what I do during a recession, because believe it or not, I actually make more money during a recession than I do when the market's going up. This is a great time to be investing for those that can. And so today I'm going to talk a little bit about stock. We're going to jump right into it. So this is a 3-year time frame right here, starting back in 2017. And so we are looking at MGM. You can tell that for the most part, the stock has been averaging a little over $30 a share, right? Now, we fast forward to February 14th. And just within a month, the stock went from $31 down to $5.90. That was the low. That's how crazy it dropped, right? So this is a 5-year time frame of MGM Resorts. And this is a cap rate, the market cap rate. Basically, all their shares combined, what does it equal? So back in 2015, it was worth $10 billion. And as we're going along here, even in 2018, it hit a $21 billion peak. But we go fast forward and we go all the way to February of this year. $16 billion. And then they dropped in 1 month, they dropped down to $3.5 billion and then popped right back up to $6.67 billion. So I look at this and I go, okay, they've always been way up here. Now, this is a company that owns buildings, they own casinos, they produce a lot of cash. They have a very, very good cash balance sheet. And the thing is, we know why they crashed, right? We know that it went down because of Corona. It had nothing to do with faulty financials or bad company or corruption in the company or those kind of things, which are sometimes the case as to why a company drops like this. We know that this had to do with a sickness that affected everybody around the world, forced everybody to close their doors. So everybody was going to be affected until the market came back. So this is such a small valuation. Again, when you value it according to their assets, they own multiple casinos. It's below, it's undervalued where they're at. And so I look at that and I go, well, shucks, man, I'm going to get in. And so we threw quite a bit of money onto the stock today. And we're just looking to let it go right back to where it was before, even at $15 billion. And there's no reason why it shouldn't. So yeah, with the $2 trillion stimulus plan, we have this huge potential of a market recovery a lot sooner than we anticipate. So I'm just sharing what I'm doing. This is my opinion. Don't go based on me. Go out and make sure you guys study, you understand, educate yourselves. I'm just showing you guys what I'm doing. I'm invested in MGM, I'm invested in Delta, and I'm invested in United Airlines, and then a couple S&P 500 type mutual fund stocks. Okay, so I'm just driving home right now. I got a few messages of people that wanted to understand a little bit more, maybe an illustration on if we invested about 100 shares of the stock at 13 bucks, what that would equal. As soon as I get home, I'll let you guys know. We bought like 4,000 something shares today. Anyways, I'll let you know what that is in a little bit. Just headed home and I'll do it in my home office on the whiteboard. Okay, had to make dinner real quick and in my office, got to get my meal. We're gonna do a quick video here. So pay attention, replay this. I'll give you a quick breakdown and I'll actually just show you real numbers and so you guys can track what we did on this stock. Let's get right to it. So we got the whole graph right here, right? And we know that market cap rate, you know, things are going along. MGM, $16.27 billion on February 14th, drops down to $3.51 billion, which is right here. And it jumps up to $6.67 billion. That's where we are today, coming from a 16.27, completely undervalued. Now we go to our stock shares. February 14th was $32, drops down to March 18th, $5.90, March 26th, $13.60. Same kind of thing, right? We're going along, boom, 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 $32, and boom, $5.90. I have a friend that actually invested at the $5.90 rate. We invested at $13.60. Okay, now I'm going to go over some forecasts. Now, you don't have to use CNN.com. It's not like they're always right. Please don't quote me on all this kind of stuff. I'm just giving you guys an example. So they have a low forecast of $10, meaning that you'd lose 27.7% of your money if you bought today. A median of plus 145% increase and a high of 196.2% increase. So it means $10, $34, or $41 if you invested in the stock today over the course of possibly a year. What that means in simple terms is, let's say you took $1,020. So you buy 75 shares times 1360, which is a going rate right now, equals $1,020. It really doesn't matter where the market's at. What matters is when you sell it. So let's just say you end up deciding to sell at the $10 rate. That's the low. You're going to get 750 bucks for it. You're going to lose $270. For us, we don't believe that that's much of a risk. Let's just say you went to the median and it hit $34. 75 times 34 equals $2,550. That's a gain of 1,530 bucks. Or it hits the 41, so $75 times 41, 3,075 bucks with a gain of 2,055 bucks. You took your $1,000 and you turned it into one of these or some kind of variation in between. Either way, the average stock per year, like for a normal mutual fund or something like that, is 8 to 9%. And that's like a great return. But again, we're looking at percentages because of the drop at 145%, 196%, and anything in between is great. Okay, so what does that mean for my investment or my side? Because I told you guys I'd share that. I'm very transparent, and I do these things and I show what we're doing in our investment so that you guys can hopefully learn from it. Real world examples. So here's what we did today. This is what I bought. I bought 4,000 shares times the 1360 equals 54,400 bucks. If I was crazy enough to sell at 10 bucks, the low, that would equal $40,000. 4,000 times 10. I'd have a loss of 14,400. We wouldn't, but let's just say I had to pull the money out. If I hit the median, 4,000 times 34 would equal $136,000 with 81,600 profit. 4,000 times 41 on the high, 164 with $109,000 profit. So this is why you guys always hear from investors saying, hey, let your money work for you. That's $109,000 profit from 54 grand that was parked in another account anyways. And so we do real estate deals, we'll do business deals, and I'll do investment deals of all types. Over here, you took $1,000 and you let it work for you for the next couple months, whatever it is. You're at 1,500, at 2,000, maybe you're somewhere in between, but it's making you money. And so then imagine you grew that into something like this where you could actually live off of your money. And the reality is, if it hit $10, I'm going to buy 5,000 more shares. I'm going to put another 50 grand into it, and I'm going to let that stuff all ride and get a really nice gain from that. That is what we talk about when we mean make your money work for you. So hopefully you guys learned from this. I'm just trying to shed more light on what we're doing as investors out here, how we're making, extra profits. Even in a recession, you can make a lot of money. It's just understanding how money works. And so I go back to what I was saying the other day. I invest more than I spend. And that's an important factor. I'll spend money, of course, and I have a lot of fun. I go out and I love buying cars and whatever else, right? But I invest way more than I spend. And so if I only got $1,000, I'm going to put that $1,000 in something that's going to make me more money. Anyways, have a good night. I got to go hang with my kids. See you guys.